Welcome to the seventh episode of Sit Down, the new Sit Down with the Shaman. I'm your host, the Shaman of Sexy, MC Shaman, Abel JG Augie Carve. Now, today's episode, we're going to talk about unemotional investing. And what that means to me is taking your emotions and feelings out of investing. Now, that's not saying that you shouldn't invest in companies you believe in or you shouldn't invest in causes. For instance, maybe you're vegan, so you probably won't invest in meat companies or slaughterhouses, or maybe you're an animal right activist or feel very strongly about animals, so you're probably not going to invest in companies that mistreat animals or have unethical animal killing methods. That's not what I mean. What I mean is that you shouldn't act on impulse when you see your stocks going down or your investments going down dramatically. So to give some credence to this, right? Last time I was in the 30% up on my all-time investments. Now, today I am only up 29.19%, which is still very, very good. Now, let's look at the week, right? So you can see this week was rough. I lost 2.15% this week. So if I was an emotional investor, what I would have done is I would have noticed that certain stocks of mine or the economy was going really down, and I would have panicked and pulled out lots of my stocks, sold, but buy low, sell high. I would have sold while it's up. Now, as you saw at the end of the week, it started to come back up. Lots of beginner investors or investors without patience, they go off this emotion, sometimes fear, sometimes anxiety of not knowing what's going to happen. They don't take into account that the stock market is cyclical. And as long as the stock markets existed, there's been this curve going up for the standard deviant, right? So yes, the curve over time goes up, but what's really happening is there's ups and downs. It's more wavical going up. It's not just the straight diagonal. But when you zoom out and look at the overall trend, yes, it's going up. And so what I want y'all to do is be patient. If I wasn't patient and I just got off of emotion, when I first started investing, as you could see on my all time, it was it was very, very staggery, and the troughs, it was going dipping low. Now, that's scary. Yes, I was seeing myself sometimes down 200, 300, $400, and I was investing less than $2,000. So, yeah, best believe that was scary. That makes it look and feel like maybe investing wasn't for me. Maybe stocks weren't for me. But I rode that tide. I kept pouring money in, and now I have over 29%, which is over 3% overall average. The average is 8% returns, and I'm over 29%. But let me also remind you, when I get my dividends, that decreases my overall percent, because when I get dividends, dude, my drip, it rebuys stock at this higher rate. So that's also why my percent currently is low, not just because this has been a rough week. So if I went by emotions, I would have sold out or sold quite a bit, and I would not have as hefty of a brokerage fund. But that's not the way, because if you pull money out, then you're not earning those dividends. You're not allowing your money to make money. So you have to ride that tide. Now, sometimes in the news, people will see somebody over a major company, or they won't agree with everything that a company does, and they will decide to pull out based on emotions. That could be wrong, and sometimes it is wrong, but sometimes that is actually right. Now, PR is important. If a company has a bad reputation, and if they start losing sponsors or customers, or people start boycotting, then that actually is the time to start pulling out, because then people are pulling out. The company is not going to be as strong. It's going to be questionable. And so your stock probably will drop. That's not emotion. That's doing your research and being knowledgeable. So please do not get confused. I do want you to react to indicators. What I don't want you to do is feel based on the market trends alone without looking at what is driving the thing. The presidential election, maybe the the takeover of Syria, the revolution, maybe South Korea's president cause or invoking martial law, maybe the war in Ukraine, maybe the possibility of peace once Donald Trump takes over. These things what can affect the economy and can cause indicators. But if you're looking for a long-term investing, long-term strategy, then that shouldn't matter, even if you have those indicators, because you're in it for the long run. And overall, the economy shoots up diagonally. Now, if you're worried about individual stocks and you see that um, somebody is messing up, or a company is doing something unethical, or the company is getting fined and things like that, that will mean the company will not be as strong. By all means, react to the indicators. Get out, pull out, sell while you're up, quit while you're ahead. That's not emotion, that's being smart. And I want y'all to be smart investors like I am. But do not take my word for it. This is I'm just some random guy on YouTube. Never trust a random guy on YouTube. I'm not your financial advisor. I'm just saying what works for me and what I know could work for you, but that you should do your own research and make your own decisions, and maybe look into getting a financial advisor. Um, let's talk about your strategies in the comments below. Do you invest emotionally, which could be okay if it works for you? Do you invest based on your ethics? Do you research? Do you look at indicators? I want to know. Like-minded people want to know. So please put that in the comments below. Smash that like button if you like this video and content. And if you want to see more videos by me and want to support me and my endeavors and what I do, hit that subscribe button below too, please. Thank you. This has been your boy, Augie. One word, one life, real.